Hey guys, we're here on the Euro Yen. Sorry, just let me put my headset on the right way. Apologies for all the noise. I just wanted to get this recording as soon as possible. I don't like to start the recording before these things go into profit. I like to do it as soon as I get in the trade, and we just rallied up 6 or 7 pips there. So we have a trading opportunity here with a great reward to risk, and it's funny this because I've not long spoken to a trader who is super aggressive and struggling a little bit with watching the trade go into arrears, and then pretty much as soon as he enters the trade. But he is a super aggressive trader, and the thing with being super aggressive is that unless you have a lot of confluence with the trade, it's probably a low probability trade, and so you need a good reward to risk, and you need it to be to have more confirmation. So it's absolutely fine being aggressive, being super aggressive. There's nothing wrong with it, but the more aggressive you are, the more confirmation, and also you need a better reward to risk, because it might be that you have to take 2 or 3 shots at the trade before you actually see it go on to win. So what I want to do is talk through this trade. This is an aggressive trade, and I'm going to talk through why it's aggressive and why I think this is the turning point, and we can see the reward to risk already there. So if anybody watched the review I did the other day on the Euro Yen, this is the AB=CD pattern with the head and shoulders. Okay, so structure level on at the closes of our candles. Let's zoom in. What do we notice? We notice this hammer, and the wick comes down to this point. Okay, what do we then notice? That we do not have a confirmed break below, close below. That means we are holding this structure level, and we have held it for multiple days. We have held it for, including our, well, from here we've had 1, 2, 3, 4, 5, and we are on our 6th day. This is confirmed that there is a battle going on. Okay, we want to stop looking for trend continuation. We want to start thinking about a potential rotation. We are at a psychological number 122.50. Let's go just before I drop down to the 240. You can see here in this leg we've hit a 38.2. What that means is if we throw a fib on from our, good grief, a fib. We throw a, my mind has just gone blank, a line. Mine's just gone completely blank. We throw a line on, there we go, there's a line, an equal measured move. You can see that we have come down into our structure level. I am going to fatten this up as well, because here on the first test, this hammer, we did have the RSI go oversold. So because we've hit that structure level and we've gone oversold on the first test, this is confirmed. It doesn't matter that these are not oversold, because the first test that hit structure is. So we do have confirmed oversold at that level. Let's go to the 240. Okay, here on the 240 we have a head and shoulders. Sorry, let me go back to the dailies. Silly me. Right. When we drop one time frame lower, anywhere within the wicks, we can look for an entry technique like a double bottom, which is a reversal pattern, or a head and shoulders. And here we are in the wicks. You can clearly see, because the wick on the dailies is absolutely huge, we are down in that level. I'm just going to remove that because I don't want it messing up my charts. So we have a fairly directional rally, and that's what we look for in a head and shoulders, a fairly directional rally. Most of the time we're looking for a swing, because it is a pattern, so we need an X leg. And then what we see is we see a retracement. We then see a move lower for the head. And then what we're really looking for now is some confirmation that this is a head and shoulders. Now, it is not a head and shoulders until we violate the outside return. You can then look for a pullback and a chance to get long. Okay, it is not a confirmed head and shoulders until we have that. I'm just going to throw a fib on from our swing high to swing low, because this is an AB=CD pattern, and I always play for fib targets, and I'm just going to show you the problem in waiting for this to be a confirmed head and shoulders. And chances are that we're probably going to violate that level, something like this. Okay, we need a confirmed break above, close above, so it's going to come up to this point. My target is at the 38.2. Now if price came to here, which is where it needs to go, the move for me has pretty much happened. You know, we're only a few pips from targets, so waiting for this is not going to be any good for me. So if I'm confident, based on my experience in the market, that this could be a head and shoulders, I maybe want to look for more confirmation. And I have other ways to enter this, other strategies to enter it, which confirm that we could see a rotation. Now I'm just going to bring the RSI up. What I do like to see as well is that on the first test we do have divergence, so we went oversold, and you can see here we're making higher highs, and we're seeing divergence here. So let me just bring this back down. Come on, computer. Okay, so the other way that I can enter, the most preferred way, is if I bring the structure down, level down to the close of the wick. Anywhere within this wick I can look for a double bottom or a 3-bar reversal, something like that. Now look, what do we have here? We have right here a 3-bar reversal. Now the problem is that if you actually go and check this, we actually violated this left shoulder by about 2 pips. So even though this is a confirmed 3-bar reversal, we violated the left shoulder, and that goes against my rules, so I cannot use that as an entry. So what I then do is say, well, hang on a minute, is there still another way to get involved? Because we've got a lot of confluence. We've got AB equals CD pattern, we've got the RSI confirmation, there's a clear battle that's been going on for a week at this level, and we're putting in a head and shoulders. So we haven't held the left shoulder, but look at what we've done. We've had a move higher. We've then seen a pullback, and we have now seen a move higher again, and this has given us a confirmed 3-point move. So this is now some form of confirmation that we've entered trend and seeing a potential rotation. It has also happened on the 4-hour, which is the higher time frame, so it means a lot. We've got this break above, close above. I can now look for long opportunities, and what do? I treat it like a simple pullback trade. I wait for price to come lower. I then look for a zone where I think the market could turn, and where do I look? I'm going to look within the wicks. We have wicks here. We have wicks here. We can see that the last 4-hourly candle, indecision. Okay, the market went down. It's now showing indecision. Let's go to the 60. Here on the 60, look at what we have coming in to this smaller kill zone. Let's get rid of that. We have a 3-bar reversal. We've got a directional move lower, indecision, followed by a higher high, higher close candle coming in at that structure level. And this structure level has been tested once, twice, 3 times, 4 times, 5 times. This was the 6th time, and each time we have held it. Look at the RSI. I'm sick of having to keep move this up so that we can see it properly. Oh God, that's not even the RSI. There? Is it there? Come on. Ah, ignore it. I thought we were oversold. Okay, ignore that. I had the line in the way. So 3-bar reversal, that means that there is not as much confirmation on this trade as I would like. So I am being more aggressive, but in being more aggressive, I've now waited for more confirmation. 6 tests at this internal structure level, 3-bar reversal, lots and lots of higher time frame confirmation. Let's bring back on the orders. Super aggressive means I want to have tight stops and ATR below this 3-bar reversal. Have I gone an ATR below that? ATR is 16. No, I've not. I've only gone 10 pips. Right, let me reposition that. 13 is 40 plus 3, wants to make 37. Okay, all right, there we go, a full ATR below that zone. Let's drop to the 15. Is there anything else? No, there's nothing really here. So super aggressive on this trade, but at the same time still waited for more confirmation. Okay, so let's work out what the risk to reward is on this potential trade. And understand, guys, that this is a riskier trade. It has a lower probability, but for me personally, I am happy to risk 33 pips for 111. That is over a 3-to-1 reward to risk. Just to confirm, daily AB equals CD pattern. Okay, at 240 potential head and shoulders. Then we have on the 240 we have the 3-bar reversal, but we have just violated the left shoulder. We have a 3-point move giving us a confirmed trend. We have a 60-minute 3-bar reversal. We've got the RSI confirmation, sorry, on the 240 as well, and we have a very good reward to risk. So if we're going to be aggressive, these might be the type of setups that we want to look at. So no idea what's going to happen. I've committed to the trade. I'm now emotionally detached from the trade. I've done the work. I've got the entry. We leave the trade to hit the stop loss, or we leave it to hit the target. We're back for an update on this trade. Thanks to Brexit, we've had a little bit of a rally. I did get extra confirmation in this trade and was able to add to the position, currently 80 pips up on this head and shoulders, which has, oh, look at that. We have on the 60-minute a confirmed break above, close above. Excellent stuff. Now, what I said in the first part of the video, that once we get the confirmation, I'm very likely going to be close to my targets. So I am hoping that we do not retrace to this point and do that, because I want to be out this market. I do not like being emotionally attached to trades that go on for a long period of time. I want to bank the profits. I want to be out. I don't want to be worrying about them over the night time, or wondering if we're going to see a weird spike because of some of the strange news event. In fact, actually, if there's news out about Brexit, I am actually just going to reduce the risk on this trade right now, just in case we see some weird obscure spike. I increased the position size by 50%, just based on a just a retracement into a trend continuation trade. So 82 up. The target's still going to be 111 pips. It's just changed slightly since I've added to the position. Let's wait and see what happens. And we're back for an update on this trade, and I just want to talk through something here. I was talking to a trader recently, and I've also mentioned in my videos a few times that look, if you're not confident in getting your entry based on a trend continuation trade or a breakout pattern, there are other ways to get involved. And I do say this time and time again, look out for when we violate major structure, when we violate it with momentum. Typically you can drop down to the 5 range or the lower time frame. Maybe we enter trend and you can get involved. This pattern, this was obviously a very aggressive pattern for me, but if I just go to the 240, we've had now quite a big rally here. And if I drop to the 60, you can see right here on the 60 that we had this big momentum candle and we've pulled back. Now if we drop to the 15, what we can then see, and I'm just going to remove the orders here, is that from this point we went very, very directionally, and we saw a minor pullback just here. Very small pullback, but a structure level nonetheless. And we went up and we violated all our structure levels. If you look on the higher time frame here, we violated them all, giving us an initial structure high, potential rotation, looking like we're going to go higher. So we can then wait for a pullback, and again we use the higher time frame and to determine that we're in potential rotation, and then we drop to the lower time frame. And then in the wicks, if we're trading very directionally, typically we only see a pullback to the wicks, which is the first chance entry. Now I like to see things like double bottoms, but a 3-bar reversal for me is almost as powerful, and look what we have right here. We've got a very bullish momentum candle, then we've got 3 soldiers working the way down, we've got hammer, and then a higher high, higher close candle, giving us a 3-bar reversal. This is now a sign, your entry signal. Now in terms of stop placement, no stops have to go below the outside return here, so let's just work this out for a moment. Okay, stops an ATR below the low, which is 12 pips. We're going to make 8. Okay, a full ATR below is here. Now in this instance, playing for a retest of the highs, we're going to end up with an inverted reward to risk. However, we are very directional. We've had that 3-bar reversal. What I want to know is there room to go higher? Now I do know that there is, because higher time frame here is I'm trading the head and shoulders, and I know that there is a high probability here we're going to come up to this 38.2. So there is no need in this instance for me to play for that retest. Instead, I just want to play for that 38.2. So let's zoom in. What does that now do to our reward to risk? So we have a risk of 39 and a reward of 42. So pretty much a 1-to-1. But what else do we have? Well, we have a high probability trade, and I'm very happy to take just a 1-to-1 reward to risk if I have a very high probability trade. And I don't want to keep repeating and make this video too long, but break it down. Higher time frame, AB equals CD pattern. 240, we were oversold. We had 5 to 6 days worth of consolidation. We had some fib confluence. I didn't show it in this video, but we had a 1618 extension based on the dailies right into our kill zone. We had the 3-bar reversal on the 240. Then we had a 3-point move on the 240, giving us an initial structure high. Then we pulled back. We put in a 4-hour indecision candle. Then on the 60 we came into a structure level that had been tested 6 times, and we'd put in a 3-bar reversal. Now with this rally we've put in an initial structure high based on the 4-hourly, giving us a confirmed rotation. And now on the lower time frame, after moving very directionally, we've pulled back to a small area of consolidation, 3-bar reversal, giving us a nice 1-to-1 risk to reward. Now I reeled all that off the top of my head because I knew I obviously did the underwriting for this case, but I knew what the pros were for this opportunity and what the negatives were. And for me now, what I could do is I could actually bank some profits and move my stop here. I would feel that confident, because this is a very good valid opportunity with room to go higher, with very little obstruction to the left. We've already had the violation above structure. We have clear sailing up to our targets, high probability. Now I'm not going to move my targets because that would actually break my rules in terms of letting this hit its targets. So I just wanted to point that out. Even if you don't get your entry, look out for those bullish moves. Drop to your lower time frame. Use your 5 range if necessary. Treat it exactly like trend continuation. You do get setups like this. And we are back for the update on this trade, and feeling pretty upbeat, but at the same time feeling beaten down. Where do I start? I have been taken out for break even, 122.80, which was here, because this is where I actually increased my position size. Even if I had not have done that, I would have still been stopped out. But guys, just check this out, okay? This is the 38.2. This is where my targets were. I came 5 pips within my target. 5 pips. I was up 107 pips. And look, we just fell short of the 38.2 fib. It's a tough trade. You know, I have a few big trades like this that's happened to me, to be honest, and I won't lie, it's difficult. It is difficult because from an emotional point of view, you're not just up 20 or 30 pips. I was up 107. Not only that, I had a lot of confluence, so I had that much confluence I was able to add to the position, which made this trade technically like up 130, 140 pips. And to get so close where these AB equals CD patterns are high probability that we're going to go up and hit them, we add the head and shoulders, we add RSI confirmation, daily higher high, higher close, 3-point move here, 3-bar reversal here, 60-minute 3-bar reversal. We even came down for that 60-minute just here. We had a flag pattern like this, more confirmation as we were trending. Then what we did is in this rally just here, we had a 15-minute trend continuation opportunity. Everything saying bullish, and it all occurred because I was more aggressive with the entry but yet waited for extra confirmation. And you know, this was a real good trade, and it doesn't matter that it won or lost. It was a good opportunity because we had the confluence, and just to get so close, man, so close, and technically up 130, 140 pips, and to be stopped out, tough. Oh well, on to the next one, as they say.